Hello, everyone. Welcome to the market update for Tuesday, March the 22nd. And as always, if you have any questions during the week or any that I don't cover in class or not able to get to in class, make sure you send those to jerry@traderspro.com. Now, the rally that we've had off those lows has been pretty strong, and it's always a difficult thing when you're looking for trend reversals, reversing from a downtrend to an uptrend. I talk about some of the characteristics, and those are always important. But again, I'm going to emphasize you can never know exactly what the market's going to do. I'll point out a few things that happened though over the last few days that have made it look like, at least in the near term, that we've reversed back into an uptrend. The market doesn't always give you what you want, and I talked about the bottoming process a lot over the last few weeks of getting that flush out move, that fear selling. And we just didn't get it. The market doesn't always give it to you. And who knows? The problem is that it could mean that it's still coming, that this, although we could be reversing into an uptrend, maybe the uptrend lasts a couple of weeks and then you're right back to reversing into a downtrend, or maybe that's what triggers the panic selling, is that everyone thinks it's over. But the problem is you can't know that for sure, and so you've just got to keep monitoring these clues and these signals. And if we start to see it reverse, if I start to see this rally break apart and some of these little warning signs that we're going to roll back over again and start moving down, if I start seeing that, I'll be pointing those out so that you can learn about those and be aware of those. But everything that I'm seeing over the last few days has been more bullish. And now yesterday, there was a possibility that we could have gotten a pullback off the price action that happened yesterday, but it didn't. It just shook it off. And I'll show it to you when we get to the charts. And so each time the market does that, you have to follow what's actually going on, and what's actually going on is that there's true buying going on right now, and it's pushing the market higher, and you have to recognize that strength. Now, I always get worried when I've been bearish and then suddenly you're forced to be bullish because of what the charts are telling you, because a lot of times then you feel like you're chasing. And that you're getting in right when the market does then turn around and come back down again. And the reality is that's going to happen anyway sometimes. And so, just try as hard as you can to just try to trade the signals that you're seeing. Be bullish when everything's showing you to be bullish. Be bearish when the clues are telling you to be bearish. And then just manage your trades. Make sure that you stop out if those bearish signals start showing up. Luckily, with the portfolio, we were in the areas that despite market weakness were outperforming: oil and defense, and so far those have been holding up pretty good. And now we can start getting into some of the other areas. We're going to focus a little bit more on computer technology today, because we haven't bothered to look at it because that sector has been really lagging during the sell-off. It's been one of the leaders of the selling, some of those tech stocks, and we're going to see if we can maybe jump back into some of those here in the portfolio. But as far as the direction alerts, you can see it on the direction alerts. We're starting to move almost into the buy range, or we should move into the buy range. Remember, these update overnight or after the market closes today. We should see this move into the buy range with today's price action, unless we suddenly sell off into the close, which we haven't done over the last few days. So I'm not expecting that to happen. So momentum is clearly to the bullish side there. Breadth is working its way towards that as well. Remember, these were just a week ago. We were on the verge of going back into that extreme oversold range. And as far as being too afraid to buy into the uptrend, thinking you've missed it, well, we're not in the extreme overbought state yet either. So if this is a true rally and we're going to keep going higher, there's still room to run on this trend, and so we should be able to participate in it at least for a little bit here. Sentiment has still remained pretty high. We're not in the extreme range, but I would imagine we'll get into that range pretty quick. The buy-sell ratios, we see it flipped here, where now the buys are outpacing the sells. That line is crossed over, and it's not extreme yet. This would be more of a buy extreme, where the buys are up here, sells are down here. We're not very wide yet, so there's still room to run from that standpoint. And then another area that I've been talking about, this has all happened pretty quickly, because I think we were looking at this on Thursday, and we weren't quite above one. I don't know if we looked down on Thursday or not, but this is the buy sell ratios of the entire market. You want that to be above one. When you start really adding stocks into the portfolio and adding stocks off of these lists and this whole system, because we found trades, and I posted patterns that you could put your watch list or that you could trade over the last few weeks. The big thing I kept pointing out, though, is that these conditions aren't ideal. They're not very bullish conditions, and so you don't want to be overloaded. You really don't want to be in a ton of stuff. And now you can start to, with it being above one, and now it's almost above two. Now you can, be more confident that the signals that you're in, the criteria that we're basing our trades on, the 98 strength rank going from hold to buy, that whole system is going to work a lot better in the more bullish conditions, the more bullish trend. So that one's finally given us the okay there. And this sentiment indicator we've moved up pretty far, pretty fast. So it's getting up here close to overbought, or moving towards overbought, but we're still in kind of the midpoint of that. And even if the market moves sideways a little bit, I would anticipate at some point in the next few days that the market's going to maybe not pull back, because it doesn't have to pull back, but maybe move sideways a little bit to just kind of consolidate the gains. It's been a pretty strong run over the last few days, and unusual. You don't usually see it that long, those type of moves. So pretty sharp recovery there. All right. Another thing we can look at here is under the index tab. So for those that are new, we're going to click right here on the indexes index tab. And this is something I point out from time. We don't look at this. I don't look at this all the time, but you want to, especially when you get start to get a move up or down over several days. It's not a bad idea to kind of peek in on the buy sell ratios of the different indexes. Here's the Russell 2000. It has almost a 3-to-1 ratio. Meaning there's almost three times as many buys as sells. So it's just looking at buys and sells right here, the buy-sell ratio. That's the broadest, one of the broadest, I guess you could see. Here's a Russell 3000 index, but that one's even stronger. That's almost 4-to-1. And then if you want to look at the S&P 500, you're looking at almost 6-to-1. So these are good, healthy, bullish readings here. There's a lot of stocks, and I did mention this, that the way the market had behaved, and we were back and forth. It wasn't going to take much of a move to get these. There's a lot of stocks that were in the hold range here to get them from hold to buy, and that's kind of what we're seeing here. Now, what would be considered overbought or getting into a pretty strong overbought condition Well, when you start to get into double digits on these ratios, that's when you'd be concerned that things are getting a little bit overbought. Now the Dow is almost there. It's at a 9-to-1 ratio, but there's only 30 stocks in the Dow. So some of these that have just a smaller amount of stocks in them, you can easily get double-digit ratios, and you get them pretty quickly. And it's not necessarily going to mean that you're already at that overbought state. So just kind of keep that in mind. That I like to look at, S&P 500, Russell 2000, Russell 3000, get a little bit better broad idea of what the market is doing, and taking a look at just the larger one, S&P at over 5-to-1. This is almost 4-to-1. This is almost 3-to-1. There's still room for this to get to those double digits, and so again, we're just not seeing an overbought state yet. So all this is telling us is that there still could be room to run on this current trend. So this is something else you can kind of peek in on once in a while and just kind of see if you get concerned that maybe the market is overbought. Because what will happen is, those of you that have been around a while, you've seen it because it's happened. It happened a few months ago. Was that we were getting double-digit ratios here. We were getting on those direction alerts, we were in the extreme overbought range or close to the extreme overbought range. The sentiment indicators were, in the overbought range. You'll start getting all these signals that are saying, "Hey, we're stretched here. We're overbought." You don't want to be piling in at that point. You want to be kind of managing at that point, raising your stops, waiting for a pullback to take place, and all that kind of stuff. We're not there yet, but those signals should start to show up. And that's when you would be a little bit concerned to buy into the trend at that point. All right, so let's take a look at the charts. I want to point out a few things here. And you can see that. So again, when we one of the basics I talk about as far as trend analysis is that, excuse me, again, these allergies get to me this time of year and get me a little bit congested, so I'll have to clear my throat from time to time. But I talk about how impulsive moves. When I use the word impulsive, it just means it's moving sharply in a direction. That can be impulsively up or impulsively down. Meaning that you're selling. This would be an impulsive move down where you're selling. You're almost going straight down. Doesn't have to be straight down or straight up, but have a look of being mostly straight down or straight up. This is an impulsive move up where you're moving up sharply day after day. Corrective is when you're moving more sideways. So this would be impulsive, and then corrective is when you kind of move a little bit more choppy, more sideways. Stocks will tend to alternate between impulsive and corrective moves. If you're having an impulsive move up, you'll usually have some sort of a sideways correction. That's what I was telling you earlier, just a little bit earlier here, that we could look for. Because we've had this big run up right here, you probably start to see it move a little bit sideways, or it could pull back a little bit, but you'd see it move a little bit sideways, consolidate that move a little bit before going higher. And why do I say that? Why would I suggest that is something to look for? Well, because that's typically the pattern. That's typically how trends move. Now, I also point out that they don't have to move exactly this way. That's why the market, we can't know exactly what the market's going to do, is because it will always keep us on our toes and not do exactly what we're expecting it to do. But that's why we got to focus, though, on what it's usually doing, what the usual behavior is, so that we can approach the market from a probability standpoint. Well, because it's acting this way, it's more probable to keep going up or more probable to keep going down. Now, the market threw us a curve right here because basically the way it was behaving right into here was it was acting more probable that it was going to go down. And that's why I've been talking about another sell-off taking place. Well, it didn't do that. It started to rise. And in hindsight, we can say, well, it was obvious, but these first few moves, they could, we've seen, look how sharp that move was. What happened? It rolled right back over and had another move down. And that same thing could happen again, by the way. We're still at a spot that where, it could still roll over and drop. The difference, I think, a little bit here is that we weren't getting the same bullish readings on the charts. We weren't getting, the buy-sell ratios shifted strongly towards the buys. So that's a little bit different in that rally back here. But that's typically how stocks move. They'll alternate from impulsive to corrective. A lot of times when you're reversing from an uptrend into a downtrend, you'll get impulsive up followed by impulsive down, and then corrective. It'll alternate. And then when you reverse from a downtrend into an uptrend, you'll kind of sometimes get that V-shaped move where you'll get impulsive down followed by impulsive up. This is feeling like an impulsive. This is clearly in the near term an impulsive move up. A couple of things that we've been watching. We were watching this big reversal day, this is becoming even more significant now because it has held. We talked about the buyers going to hold right through here. The buyers that showed up on the gap down that day, and they have. So this area right here, we've got to pay attention to that if the market ever gets back down to that area again, because that's a very significant area. Last week, I was talking about how we were gonna keep an eye on this high right here, because if we broke out above that, you'd have a higher low and then a higher high, and that's acting like an uptrend. During this whole downward trend, you're getting lower highs and lower lows, and now we're acting like an uptrend. We have two higher lows. We had one right here from here to here, and we had a very slight one from here to here. That was slightly higher low, and then we got the higher high right there. So it's acting like an uptrend again. Also, when you're trying to gauge how strong a rally is, I'm really big on the way the market closes. I make almost all my trade decisions based on how things look at the market close, because the old Wall Street phrase is that amateurs open the market and professionals close the market. Now, again, that's not, like all these phrases, they're not all completely true. There are professionals trading when the market opens, right when the market opens, and there are amateurs trading at the market close. But what that usually means is that the professionals like to see how the market is moving during the day, and then if they're going to make their decision to buy into it towards the end of the market day, and usually it's because they know how to read the price action and read what's going on, and so a lot of times if I see a big move up during the day, and then in the last 15 minutes of the market day it starts fading, it starts dropping, that tells you that there's not it weakens the buying, that the signal of buying that day, because you're wondering why is price falling into the close? Why are those professionals not buying, continuing to buy? Now remember, prices can drop not just based on selling, but also a lack of buying. If there's a lack of buying, prices can drop and come down. So if I see it fade into the close, it doesn't mean that there's sellers coming in at the end of the day, but it could be. But it also shows that there's not a lot of buying. So that because that lack of buying, it's dropping, and so it shows you weakness going into the close. Well, we didn't see that on this day right here. We closed basically right at the highs of the day. On all these days, we closed basically right at the highs of the day, and And then remember going back to that phrase earlier that I just shared with you, amateurs tend to open the market, professionals tend to close the market. Well, if you believe that, well, look how these days opened, particularly these couple days right here. We opened lower than the day before, but then the buyers came in and pushed it up, closed it at the highs of the day. Here we opened lower, buyers came and pushed it up, closed at the highs of the day. Now, yesterday we had a indecision day, what we call a doji or a spinning top candlestick formation, or there's different names for it. Now, on indecision day, basically we opened and closed right about the same spot. We had an intraday high up here, an intraday low down here. Whenever you see a run up like this and then you get an indecision day, it usually means that you're going to get a reversal of some sort. Not a major reversal, but usually you see the market pull back a little bit off of something like that. Here's an example. We had a run up right here. Here was a spinning top candlestick formation, which is an indecision day. Over the next few days, we pulled back a little bit. Didn't last that long, and then we took off higher again. But a lot of times you'll see a little bit of a pullback. So at the close yesterday, I was thinking, okay, after this type of a run, we should get some sort of a pullback off of that, what that candlestick formation was saying. Now, if you're going to trade, though, if you're familiar with candlestick analysis, usually what they'll teach you is that if you're going to trade an indecision day like that, you need confirmation. The confirmation would mean you'd want to wait for it the next day to move below the low of the previous day, and that would confirm that you're reversing into a downtrend. Well, that didn't happen here. We gapped up at the open and then kept running. We're right at the highs of the day. We'll see how things close. But again, if we close at the highs of the day again, that's another strong close. And even on this day right here yesterday, we didn't close at the highs of the day, but we were down in here in that last half hour. We actually rallied into the close. Even though we rallied up and basically closed where we opened, we rallied into the end of the day. So even there, you're seeing buyers have been coming in. So that's one thing I'll be looking for over the next couple of days is, do we have a day where that doesn't happen, where we fade into the close? And if that happens, again, that's telling me either sellers are coming in or there's a lack of buying, and that would be a stronger signal that we're going to pull back a little bit, or should pull back a little bit. And again, it could just mean that we're going to be moving sideways or just retracing that move, not that we're going to necessarily go right back into a big sell-off. There's a question about are we in is there some December resistance? Yeah, you can draw trend lines all through these different reversal points. And you can say, well, could we be bumping up into that previous support? Now is going to be resistance. Well, that's something to look for. If we start selling off into the close, and this comes way down, yeah, you could look at that as maybe that's a reaction to this area there. What I've found, though, lately at least, is that we haven't really reacted much to this one. We've reacted a lot to this one right here. This is one of those that I was pointing out a few weeks ago. This was the January 10th reversal. We rallied. We came back up to it right here and couldn't get above it. But that is something to keep an eye on. I would assume, though, that if we close the way we do right at the highs of the day, that we're going to probably end up breaking through that. Just much like when we closed at the lows of the day, right at the support level, like right here. Remember, we closed right at the lows of the day right there. Made it very likely we were going to bust through that. We opened all the way down here. Same thing on the way up. If you close at the highs of the day in in a resistance area, usually that resistance area is not going to hold. Now it may hold for a day or so. Maybe you get and as far as we've gone, it would, like I said, it wouldn't shock me if we get a little bit of a pullback or move a little bit sideways. But as far as the trend, though, it's looking like it's reversing back into an uptrend. And again, that can change, but the hard part of really the most difficult part of being a trend trader is you're trying to remove as much bias as you can remove, but we're human. We're gonna develop our own opinions, especially if you're listening to people on CNBC or you're listening to all the financial news out there, which I do. I'm not obsessed with it. I don't feel like I have to know everything that everyone's talking about every day in order to make a trading decision, but I also don't want to be missing something that could be happening that I know could affect the market. I mean, there's times when news will break, the market isn't reacting to the news, but it probably will, and so you want to be aware that news is out there. But if you're that way, it's easy. Well, just right here, look how bearish I've been. You can go back and listen to all the recordings, how bearish I've been. We don't want to be wrong. I don't want to be in these classes and tell you I believe the market's going down, and then it starts going up, and darn it, I want to be the guru. I want everyone to think I know exactly what's going on every time. It's real easy to start looking at every reason why we're going to go down, even when the market is going up. At some point, you've got to recognize what's actually happening, what is actually going on. And if you don't change, if you don't shift your bias or shift your trading to what is actually going on, you're going to end up broke. You keep shorting. If I kept shorting every day, and believe me, I've had some put option trades I've done during this run that have not worked out or may not work out. I have some time on some of them, but I usually don't short stocks, so I tend to, when I think they're going down, I tend to buy put options. A lot less risk when you do that. But now you got to be forced to change your bias. The trend is actually now up. Now, maybe as soon as I start buying into this, it's going to go right back down again. That'll happen. I promise you at some point, and you'll feel it'll drive you nuts a little bit. But you have to be willing to do that. You have to be willing to flip flop. There's a Wall Street phrase you probably heard me say before, that you can either be right or you can make money. It doesn't mean you can't be right and make money, but what that points out is that there's people that are more concerned with being right. They're more concerned with predicting what the market's going to do or what a stock's going to do than they are about the money they're making or losing. They want to be able to brag to their friends that they're, somehow it makes them feel smarter if they're able to pick a stock that doubles in value over 3 months or something like that. I deal with a lot of that with students. I have some students that's all they want to do is be able to brag to their friends. That's their purpose. If you're really interested in making money in the market, though, you've got to be willing to go through those gut wrenching times where you have to admit you're wrong. And sucks for me because I've got to do it with an audience. I got to say, hey man, sorry about that. I got it wrong down here, but this is what it's telling me now. And hopefully that's why we do these live classes, is that although it can embarrass me from time to time, it also teaches you how to look at the clues and what are the clues telling you. And at this point, you've got to start turning more bullish, because that's what's actually going on. And even though I may not trust it, I may still think that down the road we can still drop. The problem is that we can maybe rally back up. We can maybe come all the way back up and even go to a new high, and then get a big pullback that takes place. And if I'm waiting around for that drop, I could miss this whole move. If it's possible, it makes that whole move. Instead, let's just see if we can trade this. If it goes up from here, let's trade it. And then if we get bearish signals up here or wherever we get them, we'll get out, or we'll trade. If you know how to trade it to the downside by put options or something like that, you can make money on the way down as well. So now the next big hurdle that we're going to look at is going to be, hold on just a second here. Question, can we get more information sometimes by looking at a daily chart with 5-minute candles? Yeah, you can jump into intraday charts. But again, it depends on the type of trading you're doing. If you're looking to be, this whole software is designed to be longer term trading or even position trading where you're looking to be in the trade for a few weeks to a few months. That's really what this software is designed to do. So if you're looking to be in trades for a couple of days, you're swing trading or day trading, I would never use, well, I shouldn't say I'd never use, it's good. This is great software to get the overall trend. You want to get an idea of what the overall trend is, make sure you're on the right track. Even going into your shorter term trades, you can use it, but you're going to use a different software because you can't even get into intraday charts with the software. And there's a reason for it. It's not designed to be that. So I get those questions a lot. This is not a day trading or swing trading software. And so, but like I said, you could use it to go find stocks that have a 98 strength rank and are going from hold to buy, and then take that information. Okay, that's a pretty bullish stock. I'm going to go now look at the 30-minute chart or the 5 minutes or whatever you want to look at, and day trade that stock. You could do it that way, but the overall software is designed to be a little bit longer term. And the reason why I point this out is that you have to know what your trading time frame is. Because there's a problem if I think a stock is going to go up and I get in it and I set up my whole trade. I know I'm trying to trade the whole trend. I think it could get up to this high right here, and I'm trying to trade that whole trend. And then suddenly you get a bearish candle or an indecision candle, and you immediately jump out. Okay, I'm not in a longer term trade now. I'm day trading. I'm trying to day trade, so it conflicts, and then you're going to have problems. You've got to be willing to let this thing kind of go and ignore some of the back and forth. Ignore this little dip right here, so it can continue to go higher. So it's important to know what trading time frame you're going to be using. Some of you, man, you don't want to be looking at it every day, and so your time frame could be months, and but you need to know it. You need to know what your trading time frame is in order to really be successful. All right. So the next area that we're going to really be focused on is this one right here at about, I can tell you it's at the 457 area. It doesn't have to be exactly 457, but it's right around that. This is where we had this. It was a brief bullish reversal day, but it was significant. Well, it became significant later on. We didn't know how significant it was until we rallied up to it right here, and it failed. We rallied up to it here, it failed. And so if we can get above that, then, and I know you're saying, well, yeah, of course, if we get above that, we keep trending like this, we're going to probably ultimately go to new all-time highs. But that, I'm not saying we have to wait until it gets there, but that would be that if we can get above that, that would tell us we're very likely to end up at new all-time highs at that point. Not likely to go straight there, not too far away though, but you're likely to get some sort of a pullback or step, and that would even confirm it more, because then you'd have another higher high, higher low situation. But those are all things that we'll just kind of keep looking at over the next little bit. Again, what would tell me that we could pull back a little bit. Again, watch the closes. Do we come off the highs at the close? That'll be a good clue that at least in the near term we could either pull back or move sideways a little bit, consolidate a little bit. It'll tell you that some of that buying, aggressive buying, is backing off a little bit. Now on the Dow, we had a little bit of a clearer inside day yesterday. So we had the bullish candle right here, which was the bigger one on Friday, and then here we gapped down. Here's where we opened. We ended up closing lower than where we opened, and we were the body of that candle was inside of the candle on Friday, and it was in the opposite direction. Again, most of the time you see that, you're going to get some sort of a pullback from it, and we shook it off. So there again, that's another thing I was looking at today, going, man, we're right back up again. That's pretty strong bullish behavior when it shakes off some of those bearish reversal candles and it kind of keeps going. And again, you can't just ignore that. That's showing strength right there when it can do that. The Qs look a little bit more like the S&P. It was an indecision day yesterday, but we moved higher. Russell 2000 had again an inside day like the Dow. Now the Russells, and this is something I think we need to pay attention to. Here's that support. Remember, this was the support of that range that we had been in for the most of last year. We broke through it. We rallied back up to it again. We broke below it. We tried to rally up to it here. We dropped down. Now we're right there, and we're stalling a little bit out right here. Now it could just be temporary, but another bullish sign for the overall market is if the Russell 2000 can get into that area again, get back above this area again. If we go to that daily or that 6-month chart here. So the Russell is really underperforming today, and you can see why. I mean, there's that support resistance line. We had the bearish inside day yesterday, and then we're struggling. So now, again, that's probably the only weak thing I've found in my analysis, and this is where you have to be careful, because if you have 10 things that are showing you strength and one thing that's showing you weakness, again, if your bias was bearish before, the danger is that you're going to grab onto that one weak thing and say that's why the market's going to go down. I'm going to ignore the 10 bullish signals, but I'm going to grab the one bearish signal. That's someone that wants to be right and not make money. But you don't want to ignore it either. That's something we'll keep an eye on. There is the Russell does tend to be a leading indicator of the market. Do we see the market going higher, or the S&P and Dow going higher in the next couple of days, but the Russell is going down a little bit? Is it going in the opposite direction? That would be a little bit of a bearish signal there. I don't anticipate that's what's going to happen here, but that is, if we can break out above that, that would be another bullish indicator, and another reason to trust the rally is if it could break above that point. So that's something we'll keep an eye on there over the next until Thursday. We'll look at it again on Thursday. All right, bonds continue to go lower. They were really oversold right here. Now, again, this gets back to, do you always have to get a rally to alleviate an over in this case oversold condition? No, it could just move sideways, and we did get a sideways move that alleviated that oversold condition just a little bit. It just got the indicator off of the extreme. It moved it up this way a little bit, and then we dropped lower. It shot it right back down to extreme. Again, because of where we're at in extreme and another big drop. These are big drops. I mean, these are big increases in bond yields, which usually don't make big increases. So that's very unusual. And by the way, this is what's baffling too, is with bond yields really going higher, usually that would be considered bearish for the market, because it means that it'll be slowing. It'll have a slowing effect on the economy. but it's just shaking off every bit of bad news. It's been shaking up. The market's been shaking off bad news left and right all over the last week. But there again, that's a bullish signal that it's not dropping on some of these news events. It's going up off of these news events. You can't ignore that. But with this big of a move down and that extreme reversal risk, I'd say we're looking at the same thing to happen again, either move sideways or rally a little bit off of that. Trend is still clearly down. We're going to assume it's going to keep moving down. Now, this did create right here a lower high. So we have lower high, lower low. And then it went to another lower low off of that lower high. So if we see bonds, if you want to be bullish on bonds, you'd want to at least get above that high right there to create a higher high. And then if it pulls back, you'd want to see it put in a higher low and start acting like a uptrend. We're not seeing that yet, but that's what I'd be looking for. This high right here would be important if you're trying to see a trend reversal taking place. But other than that, it's still moving down. We can look at a longer term chart, see if we can see any longer term support or resistance. We broke through some major support back here. I mean, I'd have to go back. I'm not going to do that here, but you could go back a few more years and see if there's any other significant support or resistance. I wouldn't be doing that unless I'm going to be trading bonds. If you're going to do a TLT trade, then maybe you want to go back and see if there's any major support back a few years, an area that you could expect a little bit of a reversal. Gold just continues to kind of move sideways here. You've had an impulsive up, impulsive down, and then you're moving sideways. That typically you would expect that there should be another move down eventually. Now, when you're in these sideways moves, it could have it could rally up to right here and then come down, and that would still be considered the correction, but it's acting like it's in a corrective mode right now, more choppy, more sideways. And so usually you would expect that when it's done moving sideways, whenever that is, it should have another move down. And so that's what I would expect. Oil shot right back up, but there again, this is, and I talked about, remember in some of the previous updates, that's why I got back into those oil trades. And I didn't, although this looked impulsive up and this looked impulsive down, coming right back down, just, I just see that there's going to be world demand for oil, and I just don't see it changing that quickly. I felt like we could rally a little bit, and we're seeing that now. I have a little bit of a bearish inside day, possible bearish inside day forming today. Maybe it leads to a little bit of a pullback here. But what also is concerning is if we start seeing oil get back up to these levels again, it's going to put pressure. You've felt it. I know you have. I know our whole family's felt it. I've never heard my kids complain about gas prices more than they have in the last few weeks. But it affects the decisions you make. You tend to travel less. You're not eating out because you have to fill up your tank. It's going to cost you $100 to fill up your tank, and so it's going to have an effect on the rest of the economy, and so you want to see this is one of those things that it makes me just cautious when I'm seeing this rally in the market is how can it last? How long can it last if oil is continuing to move higher? But again, got to focus on what's actually going on, what's actually doing. These things can last for a long period of time, or we could see oil pull back, and that could continue to fuel the market rally from here to go higher. So, but that is something we'll keep an eye on. If oil keeps going higher and we start seeing less buying in the market, that could be a reason for that, and that's something we'll keep an eye on. The dollar is pulled back a little bit, but this looks corrective. This looks like a little bit of an ABC pattern here, impulsive, more of an impulsive move right there. So this is still acting like an uptrend. The dollar is still acting like it wants to go higher. Let's see if it continues to do that. That would be good if well, gold and the dollar seem to be moving the opposite direction, but oil continues to move in the same direction, which is not necessarily a good thing there. The VIX, you can see the VIX come way down, and it's now in an area where it's usually over 30 on the VIX, not 30 on the VIXY. This is the VIXY, but the VIX indicator. The reason why we use the VXY here is that this is the ETF that allows you to trade the VIX if you want to trade the VIX, but we're well below 30 now, and so that would be more of a bullish signal that the volatility has dropped quite a bit over the last week. And now we'll keep an eye on it. If it starts to rise up again, if we start to get selling and it starts bumping up, that'll be a warning sign that maybe heavier selling could start to take place. Semiconductors have been participating in the rally, although they look at today. We're off the highs of the day. Remember that chip stocks tend to be a little bit of a leading indicator, so that's something to keep an eye on. Now we still have another hour or so of the trading day, so that could change. We could end up closing near the highs of the day. That would be bullish if it closes at the highs of the day. Those buyers, those professional traders coming in at the end of the day, keep an eye on that. Dow Transports, they're moving strongly in the same direction. Bitcoin really been lagging. Lower highs right through here, just kind of even lows down here. But we're up a little bit in Bitcoin, but the candle is a little bit more bearish. See a similar type candle there. It would drop the next day off of that. Obviously, with it moving sideways, it's hard to tell. We've already had a big drop in Bitcoin, so whenever you have a big drop like that, even though you're moving sideways right here, sideways moves after a downtrend. You hear me talk about how stocks tend to alternate between impulsive, corrective, and when you're in a downtrend, impulsive, corrective, and then when you reverse back into an uptrend, very often you'll get impulsive down, impulsive up, and then it doesn't always do it that way. Sometimes you'll get a downtrend, a big downtrend, and it'll come way off the highs. And instead of going impulsive up, it'll start to what we call base. It'll just start moving sideways, and then it'll start moving up. Now, this does create a pattern that I often show you in the charts, which is a kind of a cup or a bowl-shaped move. So we've had this big drop right here, and then we're kind of moving sideways. It's hard to tell right now if this is setting up for another move down still, or if this is starting to kind of create that base for where it starts to move back up. Now, what would be a clue that it's more likely to be that base for a move back up? Well, if we can start clearing this and going to higher highs, that would be, I wouldn't be buying Bitcoin or being bullish on Bitcoin until it can clear this area right through here. Because until it can do that, it's still in danger of still going lower, especially since you still haven't been able to get a higher low even. You still have lower highs, or excuse me, lower, yeah, you're still getting lower highs, and you haven't broken that cycle yet. So the trend right now on Bitcoin is sideways, and sideways without a clear direction of where it's going to go out of that sideways move. And so the smart thing to do is to wait for it to decide where it wants to go, and then make your trade instead of trying to guess right here. If you're trying to, at this point, you just be guessing as to what direction it's going to move in. All right. Portfolio, I added those defense stocks. So far, we're doing pretty good. We're back to break even, so to speak. BTU, a little bit of an indecision day today. OAS is down. These are the oil stocks that I'm in. CLR, a little bit of a bearish inside day. But again, I'm going to let these kind of go a little bit, see if they can continue to move higher. RTX, this is the Fed stocks. These are doing pretty well. Glad I got into those last week. And then LHX, a little bit soft today, but I still like that overall pattern. All right. I did want to go over a couple of stocks here under the sector. I did want to just focus on computer and technology because we haven't really done a lot in that sector. And if this is a good rally, we should see that continue to move higher. Bill.com, BILL, is a 93 strength rank. And let's switch this over to signals. Again, it's come way off the highs. A little bit of an impulsive move up. A little bit of a corrective move back down, but it's given us a higher low right here. And now, again, you could wait for that final confirmation that going from hold to buy. It's pretty close. It's got to be pretty close. Yeah, it's getting there. I like that one, so we can put that one in the watch list here. Maybe, hold on here. I might have to. It's like my Traders Pro. Froze up a little bit. All right, let's try that again. All right, so let's add that one. The stock specific watch list. All right, then another one that I like. Remember the sectors I told you, this was a couple weeks ago, I said some of the sectors to really kind of focus on with this, all the things that were going on in the world, oil, defense, and I think the last class I talked about, like Raytheon. Remember, Raytheon has a lot of the missiles that they're going to be selling to Ukraine and others. There's a lot of countries right now that are looking at what's going on and how quickly this whole thing started, and they're saying, "Man, we need to arm ourselves a little bit better," And that's, I think that's just going to continue. I just don't see how that's not going to continue, especially when they see that like you all seen the horrible pictures and stuff like that. That's scary to think that a city that you live in could be wiped out in a matter of weeks. Defense spending is going to keep going, and these stocks really haven't reflected that demand that's likely to be coming. So I really like those. And then I said I talked about network security software. There's going to be attempts to hack into these companies and cyber attacks and things like that. So cybersecurity stocks, there's a couple of them here that I think you could add. FTNT is one that's higher on the list here. It's just the chart pattern. I don't like the chart pattern as much. It just seems to be kind of whipsawing a lot. Now maybe that changes, but there are a couple other patterns I liked a little bit better. One is pull it up here. Datadog right here. Well, I think I've had this in the watch list before. I've even traded it before. 93 strength rank. What I like about this is you back out, you look at this here's a larger uptrend right here. This looks like a larger ABC correction. And again, you could wait for it to go back to a buy signal for confirmation on that. That one still has a little ways to go to get back to a buy signal. That's one I liked, that list. And then Cloudflare Net is a ticker symbol NET, 93 strength rank. Now, this is one of those where, again, you could say kind of like what Bitcoin looks like, where you can say, well, it's moving sideways right here. Previous move was down. Should we be thinking this is going to go back down or go lower? This could be one of those basing patterns. We've already come way off the high, so you have this big drop right here. And then what you're looking for is, okay, we have a slightly higher low right here. And I'd be looking to see if we can get, although we're getting a buy signal today, I'd probably wait to see if you can clear that resistance. And that might be moving up the right side of the bull if it can do that. But the reason why I love these trades is because, especially if they're good companies, is that, if we do clear this, it's not unrealistic to think the stock can't get back up to its previous high. You can put a stop down below the last low, because obviously if it breaks out and then comes all the way back down and reverses that'd be bearish. Maybe this is a correction for another move lower at that point. But so the amount that you're risking is small compared to the amount you can make just getting back to the previous high. There's about a 3-to-1 reward to risk there. I have an opportunity to make 3 times what I could lose. I love those opportunities. You find those types of trades, and again, make sure you're getting confirmation that it's acting like it's going to move back up. We're not just trying to guess it's going to go back up. We'd like to see it actually break this resistance and act like it's going back up. But you manage your trades like that, and you're gonna most likely make more money than you lose in the long run, which is what everyone's goal is. All right. All right, so those are the ones. Let's add this one to the watch list here. I don't know if I added Datadog, so let's add that one. Now, getting back to the portfolio here real quick, I did want to add a couple of stocks, and they are tech stocks, but these are ones that I'd like to jump back into anyway. Nvidia is one of them, 97 strength rank, and it's had a buy signal now. I'm going to go ahead and add that in. I want to put my stop. I'm going to have a little bit of wider stop down here, down about 207. I don't know where else to put it. I mean, after that run up we've had there, and if it comes all the way back down to there, I'd want to be stopped down for sure. Let's see what I can get. Stop price at 207. Yeah, see, so the 35 shares would be about 9,000 to trade, but I want that portfolio at risk to be above 1.5%. So I'm going to have to drop probably back down to what was 25 shares. Yeah, 25 shares is right at it. So I'm not going to have a real big position here, but I want to get some exposure to Nvidia. And then Tesla's another one that I'd like to jump into. We're not going to be able to get very many shares of this either, but 92 strength rank, but recently gone back to a buy signal. I like the big pullback it's had. Look at a longer term chart. Had the deep pullback. We'll have to have a little bit of a wider stop on this one as well. Get it below this low, this last low, which would be about 756. Yeah, boy, this is going to be hard. We only have 10 shares. Yeah, 7 shares, about almost 7,000 in the trade with a 1.5% portfolio at risk. All right, we'll see how that goes. Uh-oh. What happened there? I think okay, it did it right. I was like, I thought it added the shares to like 100, 700 shares or something. It wouldn't let me buy it. I wouldn't have the money to do it. All right. That's all I have. We'll see you Thursday for the stock specific class. Have a great week, everyone. Bye now.